The market posted solid gains on Wednesday as money rotated into more beaten down names and away from the sky high techs. The rotation trade held up for a strong close, although not as much as was indicated early in the day when vaccine excitement was gripping the market. The materials sector is now outperforming information technology for the past month, up 8% versus 7.7%. Industrials were the strongest sector, with the airlines the best performing shares. The Fab 5 megacaps sat out the rally with Amazon down again. Amazon's shares are off 6.1% in the last three sessions, while Jeff Bezos reaches toward the $200 billion mark. The broader market followed a familiar recent pattern of big moves in the last hour of trading, although Wednesday was more choppy. In my opinion, expect more chop as the upside move in the markets is nearing a critical point. I have bored you with talk about the VIX and the fact that it remains stubbornly above the 25 level. And I haven't brought you new stocks or other interesting information lately. But here's the thing. Boring right now is extremely important, and boring will make you wealthy. So we know the VIX wants to chop the heads off of the greedy. So what are the charts saying? Well, let's take a look. And we're looking at the 4-year weekly chart on the spiders, the SPY. And the reason we're looking at the weekly is because I think that's where the action is. And I think the weekly also bears out the critical points and also the possible cracks in the market. As we can see here from the bottom, we've run up to that point there. We had a decline here, and we're back up to here. Now, this is why this is critical, is we need to exceed this level here and continue moving on up. The next level we want to get to is, of course, that previous high. But right now we're just dealing with this level right here. Now the NASDAQ has already run to record highs, but the spiders, along with the Dow Transports, and the Russell 2000 are behind the S&P. So we need those major indices to move as well. And so those become critical points also. Moving here into the volume, we can see that from that point there, volume has steadily declined. Now, we certainly want to see a decline of the downtrend, but once we start moving up, we'd like to see an upward move in the volume, and we don't see that. So that's a bit of a concern here. The next concern is the MAC. We had that high there, but we're only here. And the slow line just barely came through that zero line. So we're well below the previous high here, and we're still below the normal level or the average level that we were in back here in these past couple of years or so. So we need to move up, and it doesn't have much time to do that. You can see here in the histogram that we are at a relative high in consideration of the previous highs throughout the past 4 years or so, but it's starting to stall out. Moving here into the price rate of change, same thing. We've reached this level here above 75. It's higher than we have been in the past several years, but this is going to run out of steam here too soon enough. Now, this is the relative strength index. We're at a moderate 63.78, but here is one of the main problems that I see. All right, going back here to this point, we see that high there. And then you can see this relative high at that point. Let's go back up to the price chart and take a look. Here at the price chart, this was that first high, and this was that next relative high. Well, what happened? We had a pretty good downtrend down to that point there. Moving back down to the relative strength, one more look at this. So again, you see that this level here, we got down to this point here, but we got no higher. So that's a pretty decent divergence. Take a look at this. This was a previous high here, and now we're at a relative high. We still may continue on up, but it's certainly having some trouble. So go back up here to the price chart. This is that one high, and this is the other relative high. That decline there is another divergence that we can see going on through here. This downtrend is not something that you want to see. We got to be very cautious, very careful. Into the stochastics, we're at a level above 80, so we're into that overbought territory. But again, it's running out of steam. The previous time that the market had difficulties was that point there, and then ultimately this point here. So we're at a similar point in the market there. Moving on down here into the Williams, we're definitely up in the overbought territory, which is good. We can continue to hang up here, but I think as time goes on, the strength is going to erode. So we've got some mixed signals in the oscillators, and that's some of the critical issues that I see here. We need to move past this prior high and approach the previous high at that point there. And we need to do that, hopefully, relatively soon. If it doesn't happen relatively soon, I do see the market beginning to erode, and that can turn into a pretty significant correction. I'm not looking for another crash, but I think the possibility of a correction is on the horizon. I'm not going to say that's the probability yet, but the probabilities are increasing. So keep your eyes out and be cautious. And for today, that's ChewDog Charts. Thank you.